A very good afternoon. Let's take a look at the markets. Asian equities lost ground today, taking the lead from Wall Street, where the market rally there has stalled, while new Trump tariffs on the pharma sector and second thoughts around the possibility of further US rate cuts in the near future also impacted sentiment. The Nikkei share average came down by 0.83%. The Hang Seng Index declined by 1.35%, while the Shanghai Composite Index lost 0.65%. US stocks ended the session lower yesterday, making it the third consecutive day of decline. This was attributed in part on investors mulling what the next rate move would be next month in the face of recent data showing that the US economy remained resilient. Revised figures for the second quarter showed that GDP rose by 3.8% as opposed to 3.3% before, while initial jobless claims actually dropped to their lowest level since July, with durable goods orders on the rise and the goods trade deficit seen narrowing more than anticipated. The Dow Jones Industrial Average declined by 0.4%. The S&P 500 lost 0.5%, while the Nasdaq Composite eased by the same margin. Looking at local indicators now, we see that the all-share index is currently up 0.1%. The rand is trading at 17.46 against the US dollar, 20.39 vis-a-vis the euro, and 23.32 against the British pound. On the commodities front, we see that gold is trading at $3,747 an ounce, platinum at $1,533 an ounce, while Brent crude oil is trading at $68.30 a barrel. All right, let's get into it now with Trevor Garvin. He's the head of multi-management at Ned Group Investments. Thank you so much, Trevor, for joining us. So it's interesting how market sentiment can change so very quickly. Is there now doubt that the US Fed will be cutting rates in October?
Hi, Nomper, great to be with you today. So, yes, I think you touched on it in the introduction. What we saw yesterday and this week has been a slight weakening of the rand, or in other words, dollar strength. And what has been the basis of that? And I think it's the two items that you mentioned. The stronger than expected US quarter two GDP figures came out of 3.8%. That was ahead of market expectations. And also a much stronger employment or labor market in the US. So unemployment in the US is sitting at about 4% at the moment, which is a great figure to be at. The result of this was that the markets had been pricing in 2 interest rate cuts over the remainder of the year, which markets look at favorably, and hence markets were strong. Equity markets were going up quite nicely. However, on the back of this stronger GDP growth, markets are now not so certain about interest rate cuts. They think the Fed may keep rates flat for longer, and perhaps there might be one more rate cut only this year. So that is negative for equity markets, and as a result, stronger for the dollar and weaker for the South African currency. And I think markets will just have to see how the next few weeks go, because they're pricing in potential higher inflation in the US. A stronger US economy implies potential higher inflation, and as a result of that, the Fed will be more cautious to try and drop interest rates again in the coming months.
Thank you for painting that picture for us. So one of the reasons attributed to Asian stocks faltering today was President Trump's announcement that pharmaceutical imports will be tariffed to the tune of 100%. Clearly, that's going to be a big blow for exporters in the sector.
Yes, so certainly President Trump keeps us all on our toes day by day, let alone week by week. And yes, he announced 100% US tariffs on pharmaceuticals coming from the 1st of October 2025. So that's just in a few days from now. And really that tariff was going to be on the large, strong branded pharmaceutical companies and those with patents in the pharmaceutical space. However, there was a key exception, and that is if these large pharmaceutical companies are manufacturing or are committed to start manufacturing in the US, then they will be exempt from these tariffs. And we've already seen a couple of the big pharma companies coming out and announcing investment. So we saw Eli Lilly announce $6.5 billion investment in Houston, Texas to build a plant, and Roche, the big pharmaceutical company, announcing a $50 billion investment to grow manufacturing in the US. So that is the idea that Trump is wanting, is to promote the manufacturing of the pharmaceuticals within the US that will shore up their supply chain. And they learned through COVID that to be reliant on foreign partners for the production of critical materials is not the place they would like to be. So Trump is trying to encourage domestic production of key pharmaceuticals within the US.
All right.
I think the last point just to make, is that the European Union is the biggest exporter of drugs to the US. And remember, there they actually have, as part of their agreement with the US, only a 15% tariff, and that includes pharmaceuticals. So I'm not convinced that this announcement is going to have a massive impact on pharmaceuticals and prices in the US.
Well, I was going to say, let's see how that strategy goes. One last thing, Trevor. The World Bank released its container ports index, placing 4 of South Africa's major container ports in the bottom 10 out of 403 ports that it looks at around the world. But there's been criticism of the institution, as some argue that Transnet has actually been making really good strides in recent times, what with the reforms and so on. So I just wanted to get a sense from you. What do you think about this, especially because this is a very important area in terms of investor confidence?
Yes, great point. And you're 100% right. So the World Bank released this survey just in the last week, what they call the Container Port Index for 2024. And they look in this report at 405 ports or harbors around the world. And sadly, 3 of South Africa's big ports were right at the bottom. So Durban was literally number 405. Cape Town came in at 400 and Port Elizabeth at 395. So we were right at the bottom, and they're really analyzing how long it takes for South African ports to turn around containers when the ships come into harbor. Having said that, the good news is that Cape Town was noticed for showing great improvement. Cape Town recently bought in their ports 28 new cranes in the last 3 months, and those are coming online now, and there's been a market increase in the efficiency of the Cape Town ports. And as you said, just getting this efficiency is critical for South Africa's GDP and to create economic growth. And equally tied in with this is the improvement that we need.
Oh, such a pity. Thank you so much there to Trevor Garvin. He's the head of multi-management at Ned Group Investments.